Morning, it's Tuesday 29th. Thanks for joining me. Quite interesting bits today. Stock markets have pushed a little bit higher. We'll talk about them in a minute. Yen collapsed, really collapsed yesterday, but that's actually showing some interesting developments. I'm going to start with the Aussie dollar. So the Aussie has been pushing higher, I think driven a lot by this commodities boom in, the boom in prices at least. Yesterday, we made a new high for this move. Yesterday's high was 75.90. What is it now? 75.39. So we managed to beat the Friday's high by about 3 pips. Then the market collapsed. So the bulls were not happy. They're trapped. In a bull market such as we've seen, you're expecting prices to continue higher on an almost daily basis, and we should have been building some momentum in that if this was going to mature into more of a bull market. We haven't had that. The market traded a few pips higher and then collapsed. Not only did it collapse, not only did it close lower on the day, the pair closed lower on the day, we closed below Friday's low. We traded down to Thursday's low. So this is really not looking very positive. We've got a bearish engulfing candle for the Aussie dollar now. The market's extremely overbought, as you can see from the stochastic down there. I even like the way the Fibonacci levels are lining up with the price action on the daily chart. So for me, it's indicating probably we have peaked. And we need to unwind that overbought situation. So I'm looking for moves to the downside. I'm sort of scaling very slowly into a short position on this recovery this morning, just selling a little bit because I'm not exactly sure where it will peak. But what I do know is as long as we stay below 75, sort of 75.40, then there should be some sideways to downside movement. You know, we trade sideways for a bit, then we move down. I'm not saying the market's going to collapse. It's not the biggest negative signal, this bearish engulfing candle, but you can see the long upper wick on the daily chart and the small red body. It's not what you should be seeing if this market is expected to continue in this bull trend. We've deviated a long way from the moving averages, and when we scrunch up the chart, you can see that really this is probably just a bounce in a bear trend. We've got to the 50%. We didn't make it to the 60. We're retesting the October high. Maybe that's just enough. Maybe it's time for the Aussie to roll over and start to trade lower. That's my theory. Now the yen has been collapsing for quite a while now through most of this, through March for sure. With the dollar yen here, as you can see, the dollar rocketing against the yen, and actually the moves have accelerated to the upside. And you would think, well, you know, with these accelerated moves to the upside, it looks like the bulls remain firmly in control, and this market has a lot further to go. Now, we are getting very overbought, and what I'm actually concerned about is this is what you might call a blow-off top, or you know, this sort of parabolic move could be the end of it, because it's just showing how the last of the shorts were completely taken out yesterday. We had the biggest up-day move in the dollar yen for this little bull run that we've had over recent months, or recent weeks, really. You know, once we broke up through 116 sort of 20, we rocketed, but yesterday's move was the biggest move of all. What was it now? 122 up to 125.08, so 300 pips, you know, in a morning. It was pretty massive. And then, of course, the market's backed off a little bit now. So I'm thinking shorts have been squeezed out. This has probably gone a little bit too far. There isn't a sell signal. We are very overbought. I just wouldn't be comfortable being long. I'm even thinking that normally I'll wait for the sell signal. I'll wait for the pattern, you know, something to tell me the market goes down. You know how cautious I am. I do not call the top of a market just because it's probably gone too far. That isn't the criteria for me at all. I'm a trend follower. But I'm just kind of thinking now that maybe this is the end of the short squeeze. And the fact that we've pulled back, we're down on the day now. I would I would be willing to try a small short position with a stop above the high yesterday, which was, remind myself, 125.08. We get, you know, we start trading above 125.00 and holding above there, then it would look like the bulls are still in control, and maybe we can have another leg higher. But for now, I just think that I think we could see some profit taking. New Zealand dollar yen, again, a long upper wick. I need to just open this up a bit. A long upper wick on that price action yesterday, small green body. You know, we really did reject yesterday's high and pull back. We don't have a bearish engulfing candle. It would have been more negative if we'd closed below Friday's low, which in itself was a minor negative candle. So we don't have that. It's not a massive, you know, it's not a big sell signal, but I certainly, if I was long, and I've already got out of my longs, unfortunately. In fact, I got out the last of my longs early yesterday morning, so I missed most of that move. But if I still did, I certainly would be getting out now, or I would have hopefully got out yesterday afternoon. Anyway, so this long upper wick indicating that maybe it's done. We'll have a look at the euro yen. Not much of a long upper wick, something of a long upper wick, but again, we've had a huge rally, and I just wonder if it's done. The Aussie yen would be an interesting one to look at, because I think the Aussie may have turned, and I think the yen may have turned. Now, again, we don't have a particularly negative candle on yesterday's on the daily chart for yesterday, so I don't really have anything solid to base it on. This is a bit of a gut feeling, really, and you know me well enough by now to know that I don't do that. I really do rely on the technicals and my experience in the technicals, but I'm just putting it out there. There's something that I'm thinking of, and I'm going to scale into a small short position if the yen weakens again today with a stop above yesterday's high. What else am I going to look at? Dollar CAD. Well, dollar CAD's working quite well. We overran my sell limit a little bit yesterday. I had my stop too tight. 10 pips in a market like this, which is quite volatile, was a bit stupid, to be fair. If you managed to hang on to the short, fortunately I did, then it looks really good. And that really just tells me that this dollar CAD is actually going to collapse quite significantly. We've broken this trend line. We have come back to retest the trend line yesterday. We kissed the trend line and collapsed just below 126.00. We didn't get near enough to the 200-day moving average there. So this really does look quite negative. Sellers came in, bashed the market. We're down on the day. What can I say? We're oversold on the daily chart, but I'm not concerned about that. It does look like this pair will continue to go lower now that we've broken the support level. What else do I want to look at? I want to look at gold. Gold's been a bit confusing over the last few days. I've even written in my report that it's probably not worth trading. I probably shouldn't have traded it yesterday, but for some reason I can't help trading gold. I should have sat on my hands or at least looked at something else. Anyway, what's happened there? So gold collapsed straight through my support level, and we've got a big red candle on the daily chart. Now, what have I done here? There we go. Let's get back to where I should be, which is there. Just switching to the 4-hour chart, we've broken a little trend line down here. We've broken moving averages. I've got just a slight negative bias. What's really going on in my head? If I look, whoops, don't want that. What's really going on in my head is weekly chart. Let me just check the weekly chart to remind myself. Yeah, we had quite a negative candle back there. Let me show you. If you remember, well, let me start by saying this. The weekly candle here was pretty negative, followed by the big red candle here. This probably, when you look at it on the longer term, is just a consolidation of this quite negative pattern. Even here we had a long upper wick, very long upper wick 2-3 weeks ago in gold, big red candle. So I think we're just marking our time before gold takes quite a serious dump. And one of the big reasons for that, if I scrunch this chart up, if you remember, is this double top. And I kind of disregarded it lately. I kind of forgot about it as I got caught up in the 1 hour and 4 hour charts and that sort of 1935 area. But what I really got to remind myself of is we have a really big double top pattern here. This is not common. It really is quite negative, and backed up, confirmed really in my view by the fact that we've got this candle with a long upper wick on the weekly chart, followed by the big red candle the following week on the weekly chart. So as I said before, this is probably just a consolidation of a down move, and we have some more big moves to the downside in gold. So I'm kind of, now that for me, the short-term level of around the mid-1930 area has been broken, I think it's probably right to be short. I'm not short. I missed it. I was a bit confused yesterday. I was stopped out of my long. Then we bounced to 1940, so that confused me. And now we're back down below. So anywhere in the 1930s, if we get up there, which is only about 10 points away, I'm going to try a short position and just see if we roll over from there. That's my best view really on gold, but certainly think it looks like it's going down. Okay, stock markets, no change in my view really. The European markets aren't really doing anything, so I'm not focused on them, although I'm hoping the DAX will crawl a little bit higher to my resistance level, which you know where that is. It's on the cheat sheet for today, if you're not sure. I'm hoping the NASDAQ creeps up to the low 15,000 area. As you know, we're just peaking above 15,000 now. You've got the sell level on the sheet, but it is around the sort of moving averages where they are now, and the 61.8% fib, which I've talked about during the week, so I don't need to go on too much about that. In the S&P, we've pushed higher. We've pushed up through the resistance. I just can't get that bullish unless the NASDAQ gets through its resistance and the Dow Jones, the US 30, gets up through its resistance, which is also being tested at the moment. And that is around the sort of 35,100, 35,200 area. And we're just getting to that area now as well. So will the stock markets roll over from here? As the week goes on, as we get closer to Friday, probably less volatility as we wait for that non-farm payroll to come out, see how employment and unemployment has been affected in the US by all these recent events with higher mortgage rates, higher interest rates, talk of higher interest rates from the Fed, as well as, you know, higher bond yields. Certainly continued worries over inflation. I think inflation is going to absolutely take off. But I've always been fairly bullish about inflation over the past year, as you know. That's it really. Well, the big question is now, do the stock markets roll over? Gold, I think, goes lower. Yen probably bottomed out by now. Aussie could turn around and go down. That's the summary of the day, I think. Please join me again tomorrow. If you are not a subscriber and you're interested in the services that I offer, please have a look at my website, daytradeideas.co.uk. You can see the packages and subscriptions that I offer if you want daily analysis and daily signals delivered to you before you wake up in the morning. Or if you want to contact me, well, we have a contact us page, so you can have a look there as well. Please do like, share, subscribe, and any comments are always welcome in my videos, any suggestions and any other markets you might want me to look at. Thanks very much.